Hey there, welcome to the Graham Teens Housing Market Report for quarter 3 of 2022.
So 2022 third quarter has become down to a stare down between buyers and sellers. The question is, who's going to blink first? Sellers have not been willing to drop prices further, and buyers have not been willing to offer list price or simply can't afford to, even at today's reduced prices. 2022 has been a big shift in the median sales price. It has been a pendulum starting at $482 in May, where we topped at the market, down to 9.3%, where we plateaued in August and September at $450,000. However, moving into fourth quarter, we have started to see prices to continue to decline. The other big movement has been sales activity. It has dropped off considerably in third and fourth quarter. For third quarter, in the last 4 out of the 5 years, historically, we've seen home sales activity in the 9,000 to 10,000 units of closing. However, this year we saw the units close slightly under 6,000. So third quarter is about a 40% drop from the last 4 to 5 years of activity.
We ended third quarter with 4 months of inventory and rising. This puts us well into a buyer's market. The positive light is that year-to-year median sales price for single-family homes are still up from September of 2021 by 10.7%. Moving into fourth quarter of 2022, the median sales price declined 2.3% from September to $440,000.
What needs to happen for the current market to level out? Well, the new interest rate market has to settle down, and buyers are going to have to become more comfortable with interest rates running between 6 and 7%. You can see on the 50-year historical interest rate graph below where the average interest rate is 6.5%. To put this into perspective for buyers and sellers, if we sell a single family home at the median sales price of $450,000, using a conventional loan with 5% down at a 6.5% interest rate, you're looking at payments about $3,391. To qualify for this type of monthly payment, the buyer would need to make 3.5 or 3.1 times that amount as a good rule of thumb. This means the buyer's annual household income would need to be around $135,600. With a median sales price of $450,000 requiring a household income of $135,000, this more than doubles the Las Vegas median household income of $62,000. This is the disparity between what buyers can afford to offer and where median home prices are. Demand. The stop of the California influx has continued into the third quarter. We've seen a substantial decline of the California cash buyers that were driving prices up over what our local market would naturally have done without this influence. Value. Local buyers are not seeing the value at current prices as it relates to their income. Of course, inflation. With the rise of cost of everything, buyers simply do not have the extra funds for increased housing payments. And then, of course, negative headlines. Every news channel and almost every economist is reporting the likelihood of some sort of recession in the upcoming months. It is a natural tendency to be more conservative when the future seems uncertain.
So if you've been part of the leasing market for the last year, you've experienced firsthand the escalating rates of rental prices. In fact, towards the end of quarter 3, they were still hovering around $2,100 a month for an average 1,800 square foot house. Well, I've got great news for you. Prices are starting to decline in the rental market, and we suspect a significant decline for quarter 4, so stay tuned.
So what happens now for buyers and sellers? We are in a time transition. No one likes uncertainty, and the problem with news reports and media is that they over-dramatize and report late. By the time that they get the market stats out, the market has already moved. The answers are in this question. When is the right time for you to buy or sell? So here are some scenarios you and your family might be in.
If the market was to continue to decline and you purchased a home now, would that cause you anxiety? If so, it may not be the right time for you to buy a home. However, if the right home came onto the market, met all your criteria, however, the market continued to drop, but then normal home price appreciation kicked in after the correction was over, if you're more concerned about getting the right home at the right location than trying to time the market to hit the bottom, then now might be the right time for you to buy a home. If you are tight on cash and need seller assistance on closing costs, or if you have other circumstances in which you're going to need a seller to kick in some assistance on your home purchase, if this is you, you'll want to enter the market before the fray re-enters the market. While inventory is higher, you have more options and you have more negotiating power to obtain the items you need to purchase a home. If you're a 1099 or self-employed, or you anticipate your income to drop off and affect your ability to qualify, the 2-year average could hurt your ability to purchase the home you want if your income drops off. However, we always encourage you to purchase within your budget and not overextend yourself. You don't want to become house poor unless you work, live, and entertain in your home, and that is where you want to spend all of your time. Do not over purchase and become tied or married to your home.
Before jumping into our thoughts for the remainder of 2022, let's review a snapshot of where we were for third quarter of 2022. If you take a look at the graphic, the median sales price of single-family homes was $440,000. There was 4.6 months of availability. If you take a look at condos and townhouses, the median sales price was $266,000. They had 3.8 months of availability.
What can we expect to see in the remainder of 2022? Well, median sales prices will drop. We foresee the year to end around $425,000. For interest rates, if inflation levels out, we feel the market has priced in current conditions and that rates will fluctuate between 6.5% to 7%. For inventory, until buyer demand returns, even with the limited supply of housing, we foresee inventory to remain in the 4-month range. And we also anticipate rental rates to drop to around $1,850 for a single-family home.
So what is today's housing market offering our buyers? Simply a whole lot more options. They're no longer being pressured into a decision to select a home that's not ideal for them because they have a lot more homes to choose from, and they can take their time to make that decision. The other most important factor is a lot less more expensive for them out-of-pocket expense. No longer having to offer over list, over appraisal. Those were all coming out of buyers' funds. And our sellers are willing to give concessions, meaning further reducing buyers' out-of-pocket expense. So we've been able to negotiate for our buyers 1%, 2%, 3% even on closing costs. So sellers are also willing to negotiate on terms that are more favorable for the buyers. So right now, buyers just have a lot more control in the decision-making process and the negotiation terms, and it's just becoming a lot more better transaction for them. What does the housing market mean for our sellers? Well, our advice is if you don't have to enter the housing market to sell your home at right now, that you can take some time and wait, that would be the best outcome. Allow inventory to decrease. However, if this is the time you need to enter the market, it's extremely important, and our advice is to price your home to market. Don't try to get those prices from a few months ago to see if you can just get those a little bit higher. We feel that might hurt you in the long run, as prices we anticipate will continue to decrease over the next couple of months. The other most important factor is your home has to have a wow and sizzling online presence. The marketing has to be top notch. So, and we know here at the Graham team, we do everything we can to make sure that happens, but it's extremely important for you to have your home just say wow. The last thing is be patient. It's going to take some time in today's market for your home to sell.
Thank you for watching our housing market update. Please contact us if you have any questions about this report or questions about the market in general. Also, make sure you follow us on social media.